Hi YouTube, please give me a moment as we go live on Facebook. Be right back with you. We have a very important lesson today. Probably maybe the single most important lesson in the 24 lesson series that I've put together so far. And we are live on Facebook. Hi everybody, welcome to tonight's lesson. I hope you had a wonderful holiday weekend and a good trading day today. My name is Sammy. I am Director of Education at T3 Live. And again, welcome to our weekly lesson series. We're going to talk about a very, very important concept today called minor support, minor resistance. But before we get started, I want to say a couple things. One is, if you find benefit in today's video, it helps me out a lot. Please hit the like button. It's not a boost to my ego. It's just actually, I think, when you hit the like button, the algos start picking up that video and it starts showing up more, so more people see it. So if you find benefit in today's video, be sure to hit the like button. Be sure to also be sure to click on the links. Check out the links in the description of the video. I dropped a link to a webinar that I did that a lot of students liked and told me was one of the best that I've done ever, and it's called How to Write the Perfect Trading Plan. Again, link is in the description. But for now, we're gonna go ahead and get started. As always, before I actually get started, I have to share with you the standard required disclaimer to let you know that trading is risky and that especially if you don't know what you're doing, if you're trading randomly, if you're not disciplined, you can lose a lot of money. And then last but not least, whatever we discuss today is for educational purposes only. So make sure to agree to that before proceeding. Last time we're talking about the amplifiers, things that make the setup even better. And last time we talked about the above average volume. We actually did this in lesson number 22, and then in lesson 23, its own special lesson, because volume is the most overrated item in technical analysis, but it's really, really helpful if you know how to use it. Most people absolutely positively know nothing about volume or how to use it, other than they see a big jump in volume and they think it means something. They don't know really what it means. So make sure to review that lesson from last week. Okay, I don't want to spend too much time on that because we already talked about it again in two different lessons, lesson number 22 and 23. But just review last week's lesson. That would be enough. The main key thing here is to know that if you get above average volume, let's see, I must have skipped it, after multiple bars up or down, then you basically get a short-term top or bottom, right? Looking for that. Here it is. Here's the rule. T3 Live's number one volume rule. Above average volume after a strong up or down move indicates that a near-term price reversal is at hand. That's the most important, that's the takeaway from last week's lesson. Okay, if you get multiple bars up and you get a spike in volume, it probably means that most of the buyers have already committed. If most of the buyers have already committed, guess what? There's no more buying, at least for the time being. In the after, if this happened in the morning, in the afternoon, you might see some more buying. Or the next day or the next month, if you're looking at a larger time frame such as the monthly or weekly time frames, yes, buyers can come back, but for the time being, at least, you get a top. Okay. Likewise, if a stock is down multiple bars and gets the spike in volume, that usually means that's indicative of a short-term bottom. Okay. Now, when the stock is basing and the volume tapers off, right? That's called continuation volume. It indicates that the stock is going to continue with whatever trend, whichever direction it came from. So if it came from an uptrend and you get that continuation volume, that volume that's tapering off, it means that you're gonna be getting a breakout, not a breakdown. Because a lot of times the hardest thing about base is determining whether it's going to lead to a breakout or a rollover or a breakdown. And so you can use volume to kind of clue you in, right? To give you a clue as to whether we're going to be breaking out or down. Got it? And then pro volume is the volume that ignites new trends. When the stock breaks down on large volume or breaks out on large volume, that confirms the increase in the buying, which means professionals are jumping on it usually. But if you wait for the pro volume bar to show up, you're already too late. So pro volume works best if you for analysis, for analyzing the stock, or if you get another pullback, you might look back and say, wow, that was an amazing volume bar, and therefore I'm gonna really look to play the stock on the next buy setup. So, but pro volume is not as useful. It's actually the least useful volume that you can get. And as I said, we have three types: pro, novice, and continuation. And novice by far is the most prevalent, most important of the three. So this is just a recap of last week's lesson in a nutshell. If you wanna go back to last week's lesson, I also have a link in the description. You can check my Facebook playlist or YouTube playlist. All right. But with that said, we're gonna actually talk about the next amplifier, and it is so much more than an amplifier. It actually teaches you how to read charts. Now, does anybody know what purpose technical analysis serve? Why do we even use technical analysis? Does anybody know why? Why do we even use charts and technical analysis and all these tools? And Jeff is saying timing. Anybody else? To predict direction, to predict future moves. Ravi, Tony. Okay, anybody else? Correct. And I agree with Jeff too about the timing. To make money, correct. But technical analysis is used to determine whether a stock has more buyers than sellers, or vice versa. Is to determine whether something has more demand or more supply. And if a stock has more demand, that tells us where it's going. If we analyze a stock and we say we determine it has more supply, then that tells us it should be going down. So you're absolutely right when you said to predict direction or future moves, but I wanted somebody to be a little more specific and to say to actually determine supply, demand, and the relationship between the two, because there's always going to be supply and demand. It's just which group is the dominant group. That's the question. Okay? And so, my friends, if you can just understand minor support, resistance, and minor resistance, you'll have gone, it'll be a huge step forward in your progression as a technician, in your advancement as a technician. Now, right off the bat, I want to tell you that minor support is called minor support, but it doesn't mean it's minor like insignificant. It's just that it's not minor like, again, insignificant or not important. Like minor league, major league. No. Right? It is, trends, like it's the support and resistance that exist in trends. So it's trend, what are we going to call it? Whatever. But the right name is minor support, minor resistance. Okay? Minor support and resistance exists when a low revisits a prior high, if it's support, and a high revisits a prior low, if it's resistance. So what are we talking about? We're talking about pivot highs and pivot lows. So in an uptrend, we have higher highs and higher lows. So when a stock revisits its prior high, that's a low revisiting a prior high, that's a pivot low, right? LOW, and that's a high, pivot high. So when a low revisits a prior high, that area is called minor support. In a downtrend, the opposite happens. Stocks revisit a high would revisit a low, a prior low. So that's called minor resistance. The concept of minor price support and resistance can offer some important entry clues to the T3 trained trader. It also serves as the basis for increased trading accuracy. This is the type of support and resistance that should be found in stages 2 and 4. Stage 2 is the uptrend. Stage 4 is the downtrend. Okay? Learning to identify them will help the T3 trained trader anticipate when pullbacks in uptrends and rallies in downtrends have good odds of halting, right? And turning back up if it's in an uptrend, turning back down if it's in a downtrend. Not only that, but if a stock pulls back to support, that pullback or that buy setup gets 10 extra points. So it's an amplifier. It makes the setup even better. Before I go over this in detail, let me show you a real chart, what it looks like. Okay? So you have a stock that's in an uptrend, pulls back, goes up, breaks above the resistance, and pulls back to where? To or just above the prior high. If it's really strong, it might not reach the prior high, it might stay above it. And I'll tell you why in a little bit. Okay? So that's the minor support. So right here, that's minor support. Okay? Minor resistance would be, well, that's still minor support. Broke out, pulled back, where to? The top of that pivot. That's minor support. Rallied and then based or stayed based at where? At the prior resistance. What was resistance in an uptrend becomes support on a pullback. So minor support is a price level or area that lies at or just above the prior high or peak of a steady uptrend. The basis for this support lies in the fact that resistance, once broken to the upside, often, not always, often becomes support. Each prior high in an uptrend is considered to be an area of minor resistance. Now, in this case, when we say minor resistance, we do mean like an insignificant resistance area, just an area of resistance. So each prior high in an uptrend is considered to be an area of resistance. Once the stock breaks above its prior high, that peak will often serve as minor support on dips, just as a ceiling, once broken through to the upside, becomes the floor. The ceiling above you, if you live in a building, I live in a skyscraper, so the ceiling above me is the person's my upstairs neighbor's floor, and vice versa. Does that make sense? And my floor is somebody else's ceiling. So it's exactly the same thing in trading. Exactly the same thing. Minor resistance is a price level or area that lies at or just below the prior low of a steady downtrend. The basis for this resistance lies in the fact that support, once broken to the downside, often becomes resistance. Each prior low in a downtrend is considered to be minor support. Once the stock breaks below its support, that will often serve as minor resistance on rallies, just as a floor, once broken to the downside, becomes the ceiling. All right? And that, if you get that, the setup gets 10 extra points. In this case, we have a buy setup, right? 3 or more red bars in an uptrend, 2 minor support with a narrow range bar and a COG. That's a 50-point play. It's actually more, but for now it's a 50-point play. Notice here, rallied to resistance and then gave us a sell setup. So that's a short right here, stop right here, and then 2 bars in your favor, you go bar by bar. And that's at minor resistance. Okay? So that's a sell setup. We already saw this chart, the stock pulling back. Notice how it didn't really make it to minor support. You can say that was minor support also. The top of a base in an uptrend is minor support. Notice how the stock is not making it back to minor support. Does anybody know why? Anybody know why? Why is it that the stock didn't even make it back to the prior pivot high? Anybody know why? And notice again, basing at minor support, that's a very bullish base. Right. This is going to be a short lesson, but again, one of the most important. Tony said strong demand. Right. If the stock is really strong, it doesn't even sometimes make it all the way back to support. That's why the definition of minor support is the area that lies at or just above the prior pivot high in a steady uptrend, or at or just below the prior pivot low in a downtrend. Does that make sense? Sometimes it's really strong that it doesn't even make it to support. Now, let me ask you one other question, if I may. Why does this even why does minor support exist? Like, what's the theory? What's the premise behind it? Why does minor support even exist in chart when it comes to charts? Why? Why do stocks bounce at what was resistance becomes support? Why do they bounce at resistance once it's broken through to the upside? Does anybody know why? And once you understand this concept, you'll never forget it again, ever. That's a promise. So again, the question is, just so we're all on the same page, why do stocks, when they're in an uptrend, stop at or above the prior pivot high? Why does resistance broken through to the upside why does it become support right here? And the same happens here. If the stock, sometimes it doesn't pull back even to the support, but when it pulls back, it usually reaches or stays just above the support. And if the stock actually breaks through it, like pulls in really deep, like so, check it out. If the stock actually breaks below this pivot high, then that's a sign of weakness. That tells you that the stock is likely lower. It doesn't tell you that the stock is lower right away, but it tells you that the next buy setup, so let me just start over. So I need to reopen the annotation tool here. It got stuck. Okay, here we go. So if the stock, here's the pullback, and if the stock pulls in like so, then it doesn't mean it's going to continue lower, but the bounce is probably not going to be that significant. And maybe we are lower, because it should have stopped right here. Notice how it broke well below the prior pivot high. That means that stock is in trouble. Okay, I'm getting some answers, and the answer is profit taking. So profit taking, let's take that a step further. How does profit taking make the stock go up at minor support? Right? This, as I said, this stock didn't even make it to minor support. How does profit taking make the stock go up at minor support? Doesn't sound right. Here's minor support, and then went up. Profit taking is selling, so it doesn't sound right. Then buyers take profit. Okay. No, again, but it's not profit taking. Those become levels watched by other traders for entry or exit points. That's an excellent answer, Jeff, but that's secondary. They've become excellent entry points for us professionals who know about minor support and minor resistance. But we became aware of them because we've seen them work over the years. I mean, pull up any chart you want, you'll see that it works all the time on any time frame you want. Okay? So we became aware, and now as professional traders, we add, or as, let's say, some of you are still starting out as knowledgeable traders, when you start buying at what was support and now is what was resistance and now is support, so at minor support, you're adding fuel to the fire. But the reason why minor support even exists to begin with is due to the short sellers in an uptrend. So here's what happens. When a stock is up, especially if it's up a lot and starts to come in, a lot of people, a lot of novice traders, myself, I used to be one of them in the past, would short them, would go and short, because I was always trying to catch the top. I don't know why. I know why now, maybe. I was trying to be right or to feel good about myself. Oh, I got the best price. I got the top. I beat the stock. I got the top. I shorted it. So probably I was trying to feel good about myself when I was starting out. And does the market ever pay you to feel good? Really, does it? Does it pay you to feel to boost your ego? It doesn't. When you're looking for after a confirmation, right, it always shatters your ego, right? It doesn't give it to you. It gives it to you and takes it right back. So here's what happens is when a stock is in an uptrend and rallying really hard, starts to come in, a lot of people think, okay, this is the top, let's short it. They short it. But one thing about novice traders is they don't take their stops. In fact, I didn't know what a stop was. When I was starting out, I didn't know what a stop was. I didn't know you could place your stop right here. I didn't. I didn't even know what a chart was. All the charts that I was using were line charts. Were not candlestick charts. Right? I didn't even know what a candlestick chart looked like. So, okay, got it. So when the stock went against me, I just basically, I thought, okay, I'm a little wrong right now, but I will be maybe right in a little bit. And as it went against me more and more, and it became evident that I was dead wrong, let's say, shorted here, 5,000 shares. And then when it popped, now I'm down 1,000, down 2, down 3. So now I'm sweating bullets. Now, why would you, let's say it continued higher, down 5, down 6, down 8. Why would anybody be still in it? Down 9, down 10. Why would you still be in it? You're in it short. Your loss is getting bigger and bigger. Why would you be in it? Why would you continue to be in it? Anybody? Now, those on social media, feel free to participate, but I really do these lessons for Strategic Day Trader room members. And so that's who I'm talking to, just so you're not confused. But I also broadcast the lesson part of the coaching session every week. Because they have emotional attachment, okay. Hope to have less loss if it comes back, okay. They're thinking it's the top. Yeah, it's only because they're hoping, right. It's only because they're hoping it's going to come back and they're going to get their money back. That's the only reason. And the more it goes against them, the bigger the loss. And the harder to take. Does that make sense? The bigger the loss, the bigger it is, the harder to take. Because once you take it, it's a done deal. You're booking it. So that's why when it comes to, in professional trading, you have to, the moment the stock starts to go against you, you have to get out. Pretty much. As soon as you suspect you are wrong, you get out. Ask questions later. But you cannot have hope and fear. But hope is just a disaster in trading. Because hope in real life is good. If you're going through a rough time in real life and you don't have any hope, what do we call that? Depression. You fall into depression. But if you have hope, you stay a little bit positive, and maybe life, the circumstances change a little bit and you get back on your feet. So hope is a very good thing to have in real life. Those without hopes, are either dead or really depressed. But in trading, it's not good because it keeps you in losing trades far longer than you should. Okay, but it's the reason why minor support works. Because here it is. The ones that shorted, and then once the stock went against them and didn't take their stop, now they're still in it because they're hoping it comes back and makes them hold again. So here's what happens. And this is why stocks sometimes don't even make it. This is not the best example, by the way. This is not the best example. Sometimes it's the reason why stocks don't make it all the way back down, because here's what happens. Over here, let's say you're down $5,000. Over here, you're down $4,000. You're down $3,000. So you're hoping, okay, it's coming back down. You're down $2,000. You're down $1,000. You're down $300. You say, that's good enough, and you take it. So especially if the stock starts to move up a little bit. Does that make sense? So here it is one more time. This is not the best example because it never really made it back to support. Actually, here's a better example right here. Shorted it here. Let's pretend you shorted it here. Went against you. And now you're down whatever. 1,000, 2, 3, 4, 5. You are definitely sleeping on the couch tonight. And then it starts to come back down. And you're feeling better. Down, let's say 4, 3, to 1,500 and then it starts to move up, you say, I'm good with that. I'm okay with a $200, $300, $400, $500 loss or whatever it is. So sometimes they don't even, as soon as it comes back close to their entry, to their break-even point, they start covering. And the stock starts to move up. As it moves up, more people cover. And not only that, but also the professionals know what's going on. They recognize this is a high odds area to go long, is a high odds location. They add fuel to the fire by buying the stock when it actually comes back down to support. Okay, to minor support. And then what else? Anybody else? Are there any other groups that you can think of that actually look to buy the stock in this area? Are there any other groups that you can think of that look to buy the stock in this area? So far we said, here's what we said. We said minor support. Let me just zoom in a little bit. Minor support exists due to short sellers covering, right? That's so that's the first and most important reason why minor support. This is the reason why minor support exists to begin with. We also said, so again, let me just zoom in or use larger font. Okay, we said that's the first reason why minor support even exists. Okay. The second reason we said knowledgeable traders or professionals, professional traders that recognize what's happening add fuel to the fire. Or professional traders buy at minor support, small m, capital S, which again adds fuel to the fire. Number 3, anybody else? Open bids that went unfilled as price rose. Okay, that's not a bad answer. Third reason, the people who didn't get in earlier or late, they will get in now. I don't know if you're talking about what I'm about to say, Ravi, but here it is. The third reason is, check this out. It's not just the shorts, by the way. Let's say you were in the stock long and you were thinking your target is up here, $7. Let's say you were thinking the stock should go to $7. But then you saw this giant volume bar and this big green bar and you said, uh-oh, that's what Sammy just covered last week. This is novice volume. Let me get out. You get out of it, and it turned out to be just a short-term top, not a long-term top. And then lo and behold, the stock explodes without you. And you say, darn it, I knew Sammy didn't know what he was talking about. I should have stayed in it. Right? And then guess what? And now you're getting the chance to get back in it at or just slightly above in this case where you got out. So my friends, those are called the sold out bulls. Basically bullish traders who, let me erase this, who got shaken out but really wanted to be in it still and got out for some reason. Maybe they couldn't withstand the sell-off. Maybe they saw the big volume bar and they thought this was the top. They got out for some reason. So sold out bulls get the chance to get back into the stock at or about the same price where they got out. Perfect. So when they get in, it's only adding fuel to the fire. It only helps to push prices up. And that's why if you get a buy setup at or near minor support, it gets 10 extra points. But it's not only that. By evaluating minor support and how much the stock pulls back into it, or in this case it didn't even reach it, as we said, it should tell you, that should give you an idea of what kind of a stock we're dealing with here. How bullish, how bearish, how good it is. Does that make sense? Does that make sense? So analyzing minor support, minor resistance is not only important for as a location item for going long and short, but it's also as a way to analyze how healthy how bullish or bearish a stock really is. Does that make sense? And number 4, if you can guess, well, is there a number 4? There is. So the short covering, the professionals who buy at minor support, the sold out bulls. Is there anybody else? Are there any other groups that also look to buy at minor support, which strengthens it, which confirms it, makes it a more valid point even for us, for you and me as technicians to buy there? Are there any other groups? If anybody guesses the name of this group, I would be extremely impressed. What's number 4, guys? You're not going to guess, so I'm just going to go ahead and give it to you. Somebody just said investors. Actually, that's not bad. Robots and algos, you're 100% correct, but that's what I call that professional traders. I mean, that's us, robots, right, that are we're programmed by professional traders. So it's the same thing. So it's the value. So when Hari said investors, really, that's correct to some extent. It's value-based traders. Is that what we call them? Like value traders or investors that love, that always look to buy a strong stock on a pullback. That love, or bargain hunters. How about we call them bargain hunters? Bargain hunters. People that love bargain. People that love to buy stocks on discount when there's a sale going on. Like Warren Buffett. But we're talking about the Warren Buffetts of traders, basically. Because some traders only go long on pullbacks. Because breakouts, and that's the truth, have a much higher failure rate than pullbacks. Breakouts have a much higher failure rate than pullbacks. Does that make sense? So 4 groups of people which make minor support an excellent point on the chart to go long. All right. Question: how do you differentiate between a minor top and a potential complete top? Well, we can talk about that, but the point of this, it's let's say you don't know. Let's say you think it's a major top. Here it is. Big rounding top with a breakout failure. Every rounding top has a breakout failure in it. So let's say it's a big breakout rounding top, really ugly. But look, so it's not, you're not trying to determine whether this is a real top or not. What we're saying is, if the prior top fails and then the stock pulls back to the prior top, that's an excellent buy point. The more bearish the prior top was, the stronger the prior pivot high, this one here. The more candles usually, the more bearish it is. The bigger the bars, the more bearish it is. The more volume, the more bearish it is. The existence of any failure in the prior pivot high, the more bearish it is. The more volume, I think I said, the more bearish it is. The faster the stock pulls back, if it starts from a wide range red bar, the more bearish it is. The more bearish the prior pivot high is, the more bullish the stock becomes once it clears it, which means the more bullish that minor support is. So does that make sense? So I'm not trying to, in this lesson at least, I'm not trying to teach you how to differentiate between a bearish top and a bullish top. I already gave you the bullet points of what makes a bearish top. I said the more candles, the bigger the volume, the existence of any failure, the faster the pullback, the more extended the stock is. Those are all signs that it's a real top and not just a pullback. But the point of this lesson is not to try and distinguish between those tops versus the V tops, which are not that bearish, which are just indicative of normal profit taking, right? Normal selling. The point of this is to say, if we take out the prior pivot high and the more bearish it is, the more bullish that minor support becomes. Does that make sense? Okay. All right. I hope it does. That's why in real life, when we admire people that experience great hardships and come out on top, meaning they experience a challenging thing that we as mere mortals wouldn't be able to maybe go through or experience without giving up, and they don't give up, and they come out on top. Those people we call our idols, right? We admire these kind of people. Trading is kind of the same way. If a stock gives you something, a really bearish stop, and it fails and it ends up breaking above it, overcoming it, then you really want to look to play it long on the next pullback. Does that make sense? All right. So I trust I explained it well enough that it will never leave your brain after today. That, once you got this, I said you're never going to forget it. I trust that to be the case. Again, here's the prior pivot high, and then the stock stopped at or just above it. Again, when it's really bullish, it doesn't even reach it. Right here, and then stopped at it, and then based at it, which is bullish base. And then from there, a breakout. On the way down to the downside is exactly the same thing. Based, breakdown, when it goes back up, that's minor resistance. So if it's not a pivot, here's the pivot, right below it, but sometimes it's not a pivot, it's just a base. What's more bearish actually, when you have a pivot and a retest of a prior pivot low, or when you have a base? Anybody? What's more bearish? What's a better sell setup? Normally, what leads to a better sell setup? A base breakdown and a retracement, or a pivot breakdown and a retracement? Lynn is saying base. Anybody else? Anybody else? A base. Great. Good job. Correct. Why? Now that you gave me the correct answer, why is that? Why is it that bases are even make for a stronger resistance area? Does anybody know why? Because in bases, you have a lot of candles. Check it out. The more the stock goes sideways at a certain price point, at a certain level, the more people get involved. The more buyers, the more sellers. But guess what? The more, let's say the buyers now, when the stock breaks down, they're all now underwater. The ones that didn't get out. So when the stock goes back up to that area, and now they're back to break even-ish, they're going to look to exit, and there's a lot of them. They're exiting, they're selling basically, will lead the price lower. And then you got the other groups, as we said, right? As we discussed a minute ago, right here. The professional traders, the sold out bears in this case, right? Bears, but I'm not gonna. And then the bargain hunters who always look to short a weak stock on a rally. So bases are even better than prior pivots. Okay, bases are even better. Bases are even better. Here's a prior pivot low right here that failed, and then the stock retested, so that's minor resistance. Tell me one positive thing about this minor resistance, about this sell setup. One negative. One positive, one negative. Anybody? One negative, one positive. What's a good thing about this minor? What I'm trying to say is, why was this minor resistance here pretty strong, and why was it weak? Why was it strong? Why was it what made it strong potentially? What made it weak? COG is another amplifier which we discussed in previous lessons, correct? But I'm just talking about the minor support, minor resistance in this case. The minor resistance is weak because this is from yesterday. You see the break? This is from yesterday. So a lot of the traders that bought it were not even in it today. So when it broke down, they were all wrong, right? But a lot of them are already out. This is an intraday. This was an intraday chart. Does that make sense? So, or if it's a daily chart, then this is an old with time heals all wounds. The same in trading. With time, people just drop out of that stock. Maybe the ones that bought it already got out here, there, here. So they're not going to be there to the buyers to sell it because it's old. It's from a while ago, from like a month ago or whatever, right? Okay, that's one. Another thing, this was not the intraday. This was not the This was not yesterday. This was from January, let's say January 20th, versus today is February, so a couple weeks ago. Okay? Or 2 weeks prior. That's one thing. Another thing that's the reason why this minor resistance might not be as strong as, let's say, if the pivot was here just last week versus last month. Does that make sense? So with time, it becomes less relevant as a minor resistance area. But notice how big of a volume it got when it pivoted here, which means a lot of people bought it. A lot of people bought it. So for sure, there's going to be some that will be looking to exit their longs that didn't exit, and now we're sitting on losing positions, and on the way back up, now they were made whole, and they would look to exit, which would lead to lower prices. So the fact that this pivot formed on high volume, well, those are buyers. They're going to need to get out. Some of them got out already because this was, it's been a while, got out here somewhere. Some of them got out when the stock broke under the prior pivot low, as evidenced by that volume spike, right? But others, the ones that didn't, are now going to look to exit. So which makes it a strong resistance area. Okay, so that's what I was talking about. This was the T3 sell setup, which gets 20 points. A topping tail gets 10 points. A COG, bearish COG, changing the guard, which is this, gets 10 points. And a narrow range bar, which is the same bar in this case, gets 10 points, and minor resistance gets 10 points. So that's a 60-point sell setup. That's a high quality sell setup. It's actually more than 60. The declining 20 is another 10 points. So that's a 70-point sell setup. The retracement percentage, 40 to 60%, is another 10. So that's an 80-point sell setup. This is a very high quality sell setup. But we'll talk about these additional amplifiers in future lessons. For now, our lesson is over. Oh, so sad. We'll talk to you guys next week. Those in the room, of course, I'll talk to you tomorrow morning. But for those that have maybe never heard me speak before, or have never been part of the Strategic Day Trader chat room, please be sure to check out the link in the description. You can get in, you can check us out for the next 30 days for only $49. Only $49. Okay? You learn basically a simple and accurate system designed to teach you how to trade objectively with a vision that's clear and unclouded by emotions. Lots of strategies, lots of different types of plays, gaps, climactics. In the afternoon, I use the 15-minute chart, earnings, level 2 scalps, you name it. Check us out. We're the 2-time winner of the best trading room in the nation, as voted on by the trading public. When Trader Planet had that contest, we won 2 years in a row. We didn't win every year, but we won 2 years in a row. And if you have any questions, feel free to reach out to our customer service at info@t3live.com or at 888-998-3548. But for now, I want to say thanks so much. Hope you enjoyed today's presentation. And as I said earlier, if you did, be sure to hit that like button. Thanks again. Take care, everybody.